Alright, let's get right into it. Before we talk about anything else, I want to give you something for free. If you stick with me through this and subscribe to my newsletter, I've got a special gift for you. A guide on the top 5 beginner investing mistakes to avoid. It's completely free, no strings attached. Now, with that out of the way, let's talk about something that impacts every single one of us. Every single day. Money. It's the reason you go to work. It's how you buy your morning coffee, and it's the tool that, if you use it right, can build you a life of financial freedom. But the very definition of money is changing, and it's happening faster than ever before. It's a massive shift, and you really don't want to get left behind on this one. We are standing at a fascinating crossroads in history. For thousands of years, the concept of money has evolved, but the underlying principles remained somewhat stable. You had a physical thing or a government-backed promise that everyone agreed had value. Today, two incredibly powerful forces are smashing that old model to pieces. I'm talking about artificial intelligence, or AI, and cryptocurrency. These aren't just buzzwords you hear on the news, they are actively reshaping our banks, our investments, and the very way we think about wealth. Understanding this shift is not optional anymore. It is absolutely essential if you want to protect your financial future and take advantage of the insane opportunities that are popping up. Think about this for a second. The financial world of your parents is not the financial world you will live in. The strategies that worked for them might not work for you. AI is becoming the new financial advisor, crunching numbers at a speed no human ever could. At the same time, cryptocurrencies are challenging the very idea that a government or a bank needs to be in the middle of your transactions. It's a world of decentralization, algorithms, and digital wallets. It can sound complicated, and frankly, a little bit scary. But my goal here is to break it all down for you in simple terms so you know exactly what's going on with your money. So stick with me, we're going to unpack all of it. We'll look at what money really is, how AI is already inside your banking app, and what the deal is with things like Bitcoin and Ethereum. We'll also talk about the risks because, let's be honest, with great opportunity comes great risk, and you need to be aware of the downsides. By the end of this, you'll have a much clearer picture of the future of finance. And don't forget, that free guide is waiting for you when you subscribe. It's a small step that could save you thousands of dollars down the line. Now, let's get started. So what is money, really? At its core, money is just a tool. It's something that we all collectively agree has value, which allows us to trade goods and services without having to, say, trade 3 chickens for a pair of shoes. It solves a huge problem called the coincidence of wants. Basically, I have to want your chickens and you have to want my shoes. For a trade to happen, money simplifies everything. It just needs to do 3 things well. Act as a medium of exchange. You can buy stuff with it, a unit of account, you can price stuff in it, and a store of value. It should be worth roughly the same tomorrow as it is today. That's it. It's a system built entirely on trust. If you look back in history, humans have used all sorts of things as money. We've used seashells, beads, and even giant stone wheels. The ancient Romans famously paid their soldiers in salt, which is where the word salary comes from. Salt was valuable because it could preserve food. Later on, we moved to precious metals like gold and silver because they were rare, durable, and easy to divide. For centuries, a coin's value was based on the actual amount of gold or silver it contained. This was a pretty good system, but carrying around heavy bags of gold wasn't exactly convenient, which led to the next big innovation in money. The next step was paper money. This was a game changer. Instead of carrying the gold itself, you could carry a piece of paper, an IOU, from a trusted bank or government that promised you could exchange it for a specific amount of gold anytime you wanted. This was called the gold standard. It made trade and commerce much easier and safer, but eventually, even that changed. In the 20th century, most countries, including the United States in 1971, moved off the gold standard. This created what we have today, fiat currency. The US dollar, the euro, the yen, these are all fiat currencies. Fiat money is money that has value simply because a government says it does, and we all trust that government to keep its promise. Its value isn't backed by a physical commodity like gold. It's backed by the full faith and credit of the government that issued it. And for the most part, this system has worked. It's flexible and allows governments to manage their economies. This brings us to where we are now, with most of our money existing only as digital numbers on a screen in a bank's server. It's just another step in that long evolution, from salt to gold to paper to digital bits, and now, that digital world is about to get a major upgrade. Let's talk about artificial intelligence, or AI. It sounds like something from a sci-fi movie, but the truth is, AI is already deeply embedded in the financial world, and you're probably using it every single day without even realizing it. In simple terms, AI is when we teach computers to think, learn, and solve problems like a human, but on a massive superhuman scale. It can analyze enormous amounts of data in seconds, identify patterns that no person could ever spot, and make predictions based on that information. When you apply that kind of power to the world of money, things get very interesting very quickly. One of the biggest ways AI is used today is in fraud detection. Have you ever gotten a text or an email from your bank asking if you just made a strange purchase? That's AI at work. The system has learned your normal spending habits, where you shop, how much you usually spend, what time of day you buy things. When a transaction comes through that doesn't fit your pattern, like a $2,000 purchase for jet skis in another country when you're usually buying coffee down the street, the AI flags it instantly as potential fraud. This incredible speed and pattern recognition saves consumers and banks billions of dollars every year by stopping criminals in their tracks. AI is also changing how banks decide who gets a loan. In the old days, a loan officer would look at your paperwork, your credit score, and maybe a few other factors to make a decision. Today, AI algorithms can look at thousands of different data points in an instant. They can analyze your income, your spending habits, your bill payment history, and much more to create a highly accurate risk profile. This can make the lending process faster, more efficient, and potentially fairer, as it can remove some of the human bias from the decision-making process. The goal is to lend money to people who are likely to pay it back, and AI is simply better and faster at figuring that out. Finally, AI is becoming your personal financial assistant. Those chatbots you see on your banking app or brokerage website? That's a form of AI. They can answer your questions 24/7, help you check your balance, or even guide you through setting up a budget. Beyond that, robo-advisors are AI-driven platforms that create and manage an investment portfolio for you based on your goals and risk tolerance, all for a very low fee. They automatically rebalance your investments and look for opportunities, doing the work that used to require an expensive human advisor. AI is making sophisticated financial tools more accessible and affordable for everyone. Now let's switch gears to the other massive force changing finance: cryptocurrency. If you strip away all the hype and the confusing technical jargon, the idea behind it is actually pretty simple. Cryptocurrency is a form of digital or virtual money that is secured by cryptography, which makes it nearly impossible to counterfeit or double spend. Think of it as digital cash that you can send directly to another person without a bank or a credit card company sitting in the middle. This is the key difference that gets so many people excited: it's decentralized. There's no central authority like a government or a bank controlling it. So, how does that even work? How can you have money without a bank? Most cryptocurrencies operate on a technology called a blockchain. You can imagine a blockchain as a giant public digital ledger, like a huge shared Excel spreadsheet that everyone can see, but no one can change. Every single transaction that ever happens is recorded as a block on this chain. Once a block is added, it's there forever. This ledger isn't stored in one central place like a bank's server. Instead, a copy of it is distributed across thousands of computers all over the world. This distribution is what makes it so secure and decentralized. This decentralized nature is what makes crypto so different from the fiat money we talked about earlier, like the US dollar. When you send someone money using your bank, the bank is the trusted middleman. It verifies the transaction, moves the funds, and takes a small fee for its trouble. With cryptocurrency, that middleman is replaced by the network and the blockchain. The transaction is verified by the network of computers recorded on the public ledger, and the funds are moved directly from your digital wallet to the other person's. This peer-to-peer system has the potential to make transactions faster, cheaper, and more accessible, especially across international borders. The other big appeal of cryptocurrency is that, in many cases, there is a fixed supply. For example, there will only ever be 21 million Bitcoin created. That's it. This is a stark contrast to fiat currencies where governments can print more money whenever they want, which can lead to inflation and devalue the money you've saved. For many people, the idea of a currency with a predictable, limited supply is very attractive. They see it as a potential store of value, like digital gold, that can protect their wealth from being inflated away by central banks. It's a completely new way of thinking about what gives money its value. So, when people talk about crypto, two names almost always come up: Bitcoin and Ethereum. It's important to understand that while they are both cryptocurrencies, they were designed with very different goals in mind. Think of it like this: If Bitcoin is like digital gold, then Ethereum is more like a global, decentralized computer. Let's start with the original, Bitcoin, also known as BTC. Created in 2009 by a mysterious person or group named Satoshi Nakamoto, Bitcoin was actually the very first cryptocurrency. Its primary purpose was to be a peer-to-peer electronic cash system, a way to send money over the internet without a trusted third party. Bitcoin's main selling point is its simplicity and security. Its singular focus is on being a secure, decentralized store of value and medium of exchange. The network is incredibly robust and has been running without interruption for over a decade. As we mentioned, its supply is capped at 21 million coins, which creates digital scarcity. This is why many people compare it to gold. It's not controlled by any single entity, it's rare, and it's seen by many investors as a hedge against inflation and economic uncertainty. When you hear about crypto as a potential replacement for gold, people are almost always talking about Bitcoin and its role as a long-term store of wealth. Now, let's talk about Ethereum, or ETH. Launched in 2015, Ethereum took the basic idea of a blockchain and expanded on it in a huge way. The creators of Ethereum looked at Bitcoin's blockchain and thought, what if we could use this secure, decentralized ledger for more than just tracking money? This led to the creation of smart contracts. A smart contract is basically a program that runs on the Ethereum blockchain. It's a self-executing contract where the terms of the agreement are written directly into code. They automatically run when certain conditions are met without needing a lawyer, a broker, or any other intermediary. This smart contract capability turns Ethereum into something much more than just money. It's a platform on which developers can build decentralized applications, or dApps. Think of it kind of like Apple's App Store, but instead of running on Apple's servers, the apps run on the decentralized Ethereum network. This has opened the door to a whole world of new financial products known as decentralized finance, or DeFi, digital art and collectibles like NFTs, and all sorts of new forms of online organizations. So, while Bitcoin aims to be the best form of money, Ethereum aims to be the foundation for a new decentralized internet. They are both revolutionary, but in very different ways. It's easy to think of AI and crypto as abstract, futuristic concepts, but they are already starting to show up in our daily lives in very practical ways. You might be using them without even knowing it. The combination of AI's intelligence and crypto's decentralized infrastructure is creating new products and services that were simply not possible before. For example, when you use a modern budgeting app that connects to all your accounts, it's AI that is categorizing your spending, identifying trends, and giving you personalized insights on how to save more money. It's your own little financial analyst working for you 24/7. On the crypto side, people are starting to use it for more than just investing. Stablecoins are a type of cryptocurrency that are pegged to a stable asset like the US dollar. This means one stablecoin like USDC is designed to always be worth $1. People are using these to send money across borders with incredibly low fees compared to traditional wire transfers. A worker in the US can send money to their family in another country, and it can arrive in minutes instead of days, with transaction costs of just pennies. This is a massive improvement over old systems and makes a real difference in people's lives. The worlds of AI and crypto are also merging to create smarter financial products. There are now DeFi platforms that use AI algorithms to manage lending and borrowing. The AI analyzes market conditions in real time to offer the best possible interest rates to both lenders who deposit their crypto and borrowers who want to take out a loan. This is all done through smart contracts on the blockchain, meaning it's transparent, fast, and doesn't require a bank's approval. You can literally earn interest on your crypto holdings or take out a loan against them, all managed by intelligent algorithms. Even simple things like shopping are changing. Some companies now offer crypto rewards on their credit cards instead of points or cash back. So every time you buy groceries or gas, you could be earning a small amount of Bitcoin or Ethereum. This is a low-risk way for everyday people to start accumulating cryptocurrency without having to go through the process of signing up for an exchange and making a direct purchase. It's a bridge between the traditional financial world and the new world of digital assets. And it's making crypto more accessible to millions of people who might not have gotten involved otherwise. Alright, we've talked about all the exciting potential of AI and crypto, but now we have to talk about the other side of the coin, the risks. And let's be clear, the risks are significant, and you absolutely need to be aware of them. For AI, one of the biggest concerns is about bias and fairness. The AI algorithms used for things like loan applications are only as good as the data they are trained on. If the historical data used to train the AI contains biases against certain groups of people, the AI will learn and amplify those biases. This could lead to systems that unfairly deny loans or financial services to people based on their race, gender, or zip code, all while hiding behind a mask of algorithmic objectivity. Another major risk with AI in finance is security. As these systems become more complex and control more of our financial infrastructure, they also become bigger targets for hackers. A sophisticated cyber attack that compromises a major financial AI could have catastrophic consequences, potentially causing market crashes or massive theft. There's also the black box problem. Sometimes, the decisions made by complex AIs are so complicated that even their creators don't fully understand how they reached a particular conclusion. This lack of transparency can make it incredibly difficult to fix errors or hold anyone accountable when things go wrong. When it comes to cryptocurrency, the #1 risk that everyone knows about is volatility. The prices of cryptocurrencies like Bitcoin and Ethereum can swing wildly, sometimes gaining or losing 10 to 20% or more in a single day. This is not for the faint of heart. If you invest money that you can't afford to lose, you could see your portfolio wiped out in a very short amount of time. While many people have made a lot of money, many more have lost a lot. It is a high-risk, high-reward asset class, and you should never invest more than you are willing to lose completely. The market is still very new and driven by a lot of speculation. Beyond volatility, the crypto world is also filled with scams and hacks. Because it's a new and largely unregulated space, it attracts a lot of bad actors. There are countless stories of people losing their life savings to fake investment schemes, phishing attacks, or hacks of cryptocurrency exchanges. Unlike your bank account, which is typically insured by the government, like FDIC insurance in the US, if your crypto is stolen, it's usually gone forever. There's no central authority to call to reverse the transaction. This puts the responsibility for security entirely on you, which is a big burden for many people. So, where is all of this heading? What will money and finance look like in the next 10 or 20 years? I think it's safe to say we're moving toward a hybrid system. It's unlikely that crypto will completely replace government-issued money overnight. Instead, we'll likely see a world where traditional finance and decentralized finance coexist and even integrate with each other. You might have a single digital wallet on your phone that holds your US dollars, some Bitcoin, some Ethereum, and maybe even digital versions of stocks or real estate, all managed and optimized by a personal AI assistant. One of the biggest trends to watch is the rise of central bank digital currencies, or CBDCs. This is when a country's central bank issues an official digital version of its own currency. Imagine a digital dollar that exists on a blockchain controlled by the Federal Reserve. This would combine the efficiency and programmability of a cryptocurrency with the stability and backing of a traditional fiat currency. Many countries, including China, are already experimenting with this. CBDCs could make payments faster and cheaper, but they also raise big questions about privacy and government control, as every single transaction could be monitored. In this future, AI will become an even more indispensable tool. Your financial AI won't just track your spending, it will be a proactive financial coach. It might analyze your income and goals and automatically adjust your investments, find you better deals on insurance, or even negotiate your bills for you. For businesses, AI will run incredibly complex models to manage risk and allocate capital far more efficiently than humans ever could. Finance will become more data-driven, more personalized, and more automated than ever before. The line between a tech company and a financial company will continue to blur until they are one and the same. Ultimately, the future of money is one of greater choice and greater personal responsibility. You'll have more options than ever before. Traditional banks, fintech apps, various cryptocurrencies, and DeFi platforms. This competition is great for consumers, as it will likely lead to lower fees and better products. However, it also means you need to be more educated and proactive about managing your finances. The days of just putting your money in a savings account and forgetting about it are over. The future belongs to those who are willing to learn, adapt, and take control of their own financial destiny in this new, complex landscape. So after all of that, what should you actually do? It can feel overwhelming, but the most important thing is not to be scared and not to ignore it. The first and most crucial step is to educate yourself. You're already doing that by reading this, which is a fantastic start. Continue to learn. Watch videos, read articles, and listen to podcasts about personal finance, investing, AI, and cryptocurrency. You don't need to become an expert overnight, but you should aim to have a basic understanding of these concepts because they are going to shape your financial life. Knowledge is your best defense and your greatest tool. Second, start small and be cautious. If you're interested in investing in cryptocurrency, please do not bet the farm on it. As we discussed, it's incredibly volatile and risky. A good approach for a beginner is to allocate a very small percentage of your investment portfolio to it, maybe 1 to 5% at the absolute most. Use a reputable, well-known exchange and never invest more money than you would be comfortable losing entirely. The same goes for new AI-powered financial apps. Do your research, read reviews, and understand the fees and the risks before you commit your money. Third, focus on the fundamentals of personal finance because they will always be important, no matter what happens with technology. This means creating a budget, spending less than you earn, building an emergency fund of 3 to 6 months worth of living expenses, and paying off high-interest debt like credit cards. These are the boring but essential steps that build a strong financial foundation. No fancy AI tool or crypto investment can save you if you don't have these basics in place. Get your foundation right, and then you can start exploring these new, more advanced tools to build on top of it. Finally, let me end where we began. The financial world is changing, and staying informed is your ticket to navigating it successfully. To help you get started on the right foot, I want to give you that free gift I mentioned. Just subscribe to my free newsletter and I'll immediately send you my guide, Top 5 Beginner Investing Mistakes to Avoid. It's packed with simple, actionable advice that will help you protect and grow your money. Thank you so much for your time. I really appreciate it, and I hope this has been helpful. Don't forget to subscribe, and until next time.